Hi and welcome back to Cheeky Crypto. Today guys, we're going to be jumping down into the world of BTC, taking a look at what's been going on most recently, what we think is likely to happen next, and all that wonderful stuff. As I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you have not yet joined us in Discord, guys, you are missing a trick. Check it out, linked in the description down below. It's the first place we go to notify the ins and the outs of everything that is happening here in the crypto space. It's completely free. I don't think you'll be disappointed. Why not check it out? Now, I am going to be applying Elliottwave theory to the charts here. If you're not familiar, there's a link to the Elliottwave theory course that we created down below as well. Do check that out. You'll get a better understanding as to kind of why I'm doing things how I do in these particular videos. And it has a good understanding of as to kind of why the price moves the way that it does as well. Okay, that's in a linked in the description below as well. And yeah, before we actually get started, I just want to kind of highlight some fantastic things that are going on here with BitGet. As you know, we really are liking how BitGet are kind of navigating this bear market at the moment, proof of reserves and all that kind of stuff. And it's the only platform I'm currently using for trading. And I actually have a Xmas Santa goodie bag up for grabs as well. So do check out BitGet's link in the description below. You can come in here, you can kind of do a lucky draw. I've actually done mine today already. You can hit go and you can kind of go through and kind of get a few additional prizes, which is fantastic. There's task centers, your dashboard, loads of things to check out, lots of prizes up for grabs. So why not check it out if you haven't done so already? Linked in the description down below. Okay, let's make a start. Bitcoin paired up with USDT on the hourly chart, and Binance is the data source. And on here, we can kind of see that we are still expecting a move to the upside. We are kind of just bouncing around a little bit, and we're kind of ranging between this supply area and this demand area. And I'm kind of expecting it to kind of play out like this for a bit longer. I'm not overly expecting the market to just all of a sudden move up, specifically with the time of year and everything else. I just kind of expect us to kind of range here and then eventually get a break to the supply range up a little bit higher. Essentially, it's a big ABC corrective structure to the upside, and this actually forms a part of a B wave move. And then from there, I think we're going to be heading on down. So before we kind of jump down more into the technicals, I think it's actually pretty important that we take a look at the on-chain stuff as well. We don't just reflect on what's happening on the charts, but we also need to take a look at what has been going on with the on-chain metrics. So up here in the top right hand side, during all of 2022, since the 1st of January through to yesterday, we've seen 12.03 million BTC go onto the exchanges, and we have seen 12.59 million coming off the exchanges. This is slowing down a little bit. It's what's that, 560,000, approximately, something like that, in terms of BTC, fluctuating around a little bit. It's an interesting one. So what I do think is important to kind of just reflect on is it's not a huge number. We would have thought more accumulation in this bear market than we've actually seen. FTX definitely spurred on a bit of a surge to withdrawals from exchanges. We've definitely seen a lot of that. In terms of the net difference over the last 30 days, you can kind of see it's cooled off. There's definitely low volume going on right now. A lot of people aren't around. They're spending times with their family during the festivities. So just kind of bear that in mind. Volumes are low. Generally, we're going to see a lower kind of price volatility in terms of BTC. Now, obviously, since FTX, we've seen a huge pull off the exchanges. That still remains true. So we should be a little bit cautious. Now, the hodl waves, I'm just going to quickly go through this for anyone who is not familiar. Basically, all we're doing here is checking day on day to see if any major changes have happened. And there's no changes with the 10 years or more. So if you've held it for over 10 years, they continue to hold it. We have a slight decrease, though, in the 7 to 10 year holders, 0.01% drop. So from 6.21% of the supply going down to 6.2. So it's interesting. It's probably gone. Someone's been shaken out, maybe 7 years. They've been holding it and now they've decided to sell. So interesting. On the 5 to 7 year holders, it's aging well, going from 7.08 to 7.11%. So slight fluctuation to the downside on the 3 to 5 year holders as they go up a bracket, going from 12.13 to 12.10. Again, we can explain where that goes. Likewise, an increase on the 2 to 3 year holders, going from 7.66 to 7.76. Again, all looking pretty good. And then obviously a slight decrease then on the 1 to 2 as they age up a bracket, going from 20.04 to 19.94. Other than that, not terribly too much to kind of talk about. Now, when we come through to the next page, the inflows and the outflows, and this is always a good thing to kind of keep an eye on, because you can't just focus in on one metric, you have to focus in on both. If the inflows are massive and you have no idea what the outflows are, you might think that, oh my god, the price is going to tank down. But what happens if actually the outflows outpace that of the inflows, when actually the price is more than likely going to be going up? So we have to understand that this is about supply and demand. Supply and demand are the things that control the price movement. So when we have here, we've got the red line and we've got the green line. The red line are your inflows, the amount of Bitcoin going onto the exchanges, and the green line is the amount of Bitcoin coming off the exchanges. During the whole FTX thing and Binance FUD and whatnot, we see spikes to the upside in terms of outflows. People are withdrawing from the exchanges. This actually compounds the problem quite a bit. But again, it's better to be safe than sorry. So we do kind of urge people to kind of reconsider if they're on an exchange, whether they want to stay on an exchange. Cold storage devices are your friend during moments of uncertainty at the end of the day. Does come with risks, of course. We do like Ledger. That's also linked in the description down below. Man, there's a lot in the description down below. But yeah, Ledger, there's a link to that. Now, if you're going to get a hardware wallet, whether that is Ledger, Trezor, whatever, make sure you get it directly from the manufacturer. Do not go on Amazon and find a good deal, because you don't know if it's a genuine, unaltered Ledger device. We've seen a few, unfortunately, get caught out with this. They buy it on Amazon or eBay and they get themselves a discount, but unfortunately their private keys are then leaked and all their crypto gets stolen. So we've seen it a couple of times in the community. So the obvious here, guys, buy it directly from the manufacturer. It's not worth the risk. Don't save $10 but lose all your crypto, right? Not worth it. Buy direct from the manufacturer. Okay, so inflows and outflows are really important. And at the moment, what are we seeing? Well, we are seeing, of course, more in the way of inflows than we are outflows. This is basically telling us that actually there isn't much demand. And yeah, we can't get too carried away with thinking the price is massively going to move to the upside. So let's go ahead and move on. Okay, we're going to talk about some wallets. I'm going to be bringing in the 0.1 BTC holders soon, and we did a poll on Twitch, and we're going to call them krill. Let me know your thoughts on that in the comments below. So at the moment, we've only got the shrimps and the dolphins. Both represent retail investors at this point, and both are, you know, pretty much up there since FTX, and basically a lot of self-custody going on here. Lots of people looking to hold their cryptocurrency assets themselves. So what we've got going on, as you can kind of see here, if we hover on it, it's 975,000 people hold more than 1 BTC. Okay, so that's a reasonable amount, significantly higher than that of previous cycles, and I still expect this number to drop down significantly as time progresses here. I do think we're going to see a lot of bleeding in 2023, and as a result, I do think we're going to see retail investors eventually get shaken out. Not happening yet, but I do think it will happen. And again, the dolphins are, you know, up here as well, quite high. Again, I think these guys will also get shaken out. 154,000 of those. Now, if I come up into the larger sized wallets, well, what are we actually seeing here? Well, we're not seeing terribly too much from the big players, right? The 10,000 Bitcoin wallets or the 1,000 Bitcoin wallets. These players are not really participating during these moments that we currently find ourselves in. The sharks, they spiked up massively. Whether that was around the Binance FUD or not, I do not know. But we have seen a significant rise when it comes to the sharks. An unusual rise, because normally they just follow the price action of BTC and take advantage of situations. But we're not seeing that right now. So interesting, we're keeping an eye on the sharks, but when it comes to the whales, they are still coming out of their positions. So on the larger time frame here, you can see to the extent, right, the black line and the number of whale wallets holding over 1,000 Bitcoin, and they've just been taking an absolute nosedive with the price action. So I don't think these whales are going to come back into the space until the retail investors are selling their Bitcoin to them. There's always a buyer, there's always a seller, and all we've seen so far are the whales selling their Bitcoin to the shrimps and the retail investors, generally speaking. So retail money has been buying and paying for the Bitcoin to buy it from those whale investors, right? And that's kind of what these two graphs are representing to us. So knowing this basically means that we should be expecting at some point the retail investors to be selling their Bitcoin back to the whales, and chances are it's going to be a discounted price, right? There's a reason that the whales operate in this particular way. We can also take a look at the Kraken size wallets, which are the 10,000 BTC wallets. These heavily accumulate during the bear market, and what's been going on right now is no different than what happened previously in 2018, which, if we bring this up here, they accumulate during the bear market and then absolutely flood the entire system with excess Bitcoin, dragging the price of Bitcoin down in the bear market lows. Now, if you time this, you can see that they dropped the their entire positions, right, onto the market. I say dropped as in they sold. They didn't necessarily sell. They just flooded the system with more supply than it can handle. And what you see is the price comes down, okay, not during this flat period here, okay, but after bringing in the very bottom. Now, what if we bring back our whale wallets, you can see for 2018, this one here, you can see that during this flat period here, they were accumulating because they were buying from our shrimp wallets, which were decreasing here. Okay, so during this flat period, we can see that this is where the black line starts to decrease down. This is a number of wallets that have 1 Bitcoin in them. And we can see from our whales that this flat period here is where they start to accumulate as retail money starts to sell to them. And then we can also see that the Kraken flood the system and bring in the actual bear market bottom later on. And during that time, you can then see a huge surge just here with the number of whale wallets holding 1,000 Bitcoin in them. So just bear in mind that we haven't seen any of that yet. What have we seen so far? We've seen retail money still going up. So the number of wallets still increasing, right? So retail money is coming in here. Whales are still coming out and Krakens are still accumulating. So we haven't seen those kind of movements in the space yet to kind of tell us that the price of BTC is likely to go down. So essentially everything here is business as usual for us. This is stuff that we talk about every single day on Twitch. Nothing unusual is occurring. And yeah, at the moment, we can't really be thinking that the bottom is anywhere near until those retail investors sell their assets to those whale investors. Okay, so when we come back into our charts here and we kind of look at this 1 hour chart, we'll kind of maybe think, oh, we're going up, we're going to have some kind of bullish cycle or something to this effect. And the reality of the situation is actually you need to zoom out and you need to pay attention to a much bigger picture, because if we zoom out far enough, what is actually going on here is we have these common things. We have the higher highs and the higher lows that break to the downside. You know, I've marked these out dozens and dozens of times, and we can see them happening here and here. And where are we right now? Well, if I go ahead and grab hold of another parallel channel and I draw it in here, just very, very briefly, you can see yourself in a very similar setup where we're then going to be looking to target that next move to the downside. So, you know, we might have to move up just a fraction more on the smaller timeframes. As I said, I'm still expecting 17K. So I do think that's something that we're going to be, you know, looking for over the next week or so. But you know, at some point, we're going to get to a point where this market goes down to the next leg. And I think we're going to continue to see these kind of little movements keep taking us down lower until retail investors sell. The whale investors, they can just sit on their hands here. They've got piles of fiat just waiting to go back into the market, but they're only going to buy it if someone is going to sell it at the right price. And I do think that Bitcoin's going to have to drop down quite low in order to shake out those retail investors. And unfortunately, I do think it is something that's going to happen. It's not something that I want to see. I don't want to see retail investors get shaken out, but I cannot see a reversal in this market until Bitcoin reaches a value level where those retail investors are willing to sell their Bitcoin so that those whales can buy it. So kind of keep these things in mind. I don't want to scare people unnecessarily and stuff like that. But essentially, there's nothing positive here. What we're really looking for is something like this, where we have those lower lows and those higher and lower highs, that break upwards, right? That's really what we're looking for here. We're looking for these kind of movements. We can see a couple of these as well. If I actually go ahead and just throw a couple on here, you can see them in here. You can pull that in. You can see one right in there, for example. You can also see one right down here. Everywhere where we have these major movements to the upside, you have the lower lows and the lower highs. Then we break upwards, right? And you can also see, I can probably draw quite a handful of these on here. You can kind of see them time and time again and over this side as well. Okay, so where we are is the opposite of this, right? We can see that we're going higher highs, higher lows, overlapping structures, and then breaking down. So without scaring anyone too much, yeah, I think we're going to see a rough start to 2023, but you know, we might move up a little bit beforehand, right? It usually creates liquidity with people getting a bit too carried away. So just kind of bear these things in mind, follow the money, who's buying, who's selling, and all that wonderful stuff. I'm going to leave this video right there. If you found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Until the next one, have a fantastic day.